about the topic of banks and financial institutions. So, the introduction of this topic is operation of commercial banks and finance company in Malaysia are governed by BAFIA 1989 and closely supervised by Bank Negara Malaysia. So, let me explain to you. For the first one is the resident bank. Under Section 60C BAFIA 1989, banking business source is based on world income scope, that is namely banking business income wherever is accrued or derived. And you must know that this world income scope is only applies to the banking business. And then accrual of such foreign income is subject to Malaysia income tax. For the second one is the overseas business loss from the banking. By reference to World Income Code under Section 60C, statutory income from the business of banking is computed. Adjusted loss from banking is also determined by it would not be allowed to set off at the aggregate income level because the availability of such deduction is not provided. Under Section 44, Clause 2, permits only Malaysia current year business loss against aggregate income. The deductibility of adjusted loss is only restricted to Malaysian business income that is accrued and derived from the Malaysia. So, for the third one is, I will explain about the non-banking business income. This is the resident bank carries on leasing and investment activities, which is the scope of income tax would be modified territorial scope. This is the first one is because of Malaysian derived income, and also the foreign source income that received in Malaysia from outside Malaysia. Under paragraph of 28 of Schedule 6, prior to year assessment, income tax exemption isn't available to bank foreign income that will be taxed in Malaysia, but it is bilateral or unilateral relief is granted for against the Malaysian income tax. Okay, next I will proceed with bank with overseas subsidiary. Okay, resident bank in Malaysia have overseas subsidiaries in business of banking. This is where overseas banking profit would subject to foreign tax imposed by the foreign jurisdiction. The dividend that paid to Malaysia holding company would be subject to the Malaysian tax, and the dividend income would be treated as the investment income. And then, for the foreign withholding tax imposed on the dividend income, accorded either it is unilateral or bilateral relief to against the Malaysia income tax imposed on such dividend income Malaysia. Foreign income tax imposed on overseas company not compute in above relief unless it have tax provision, either it is a bilateral relief or unilateral relief. Later I will proceed about the incentive to bank. For income tax exemption number 12, from the year assessment 2007, inter-Islamic bank or inter-takaful operations and also intercurrency business unit which have been approved by Central Bank of Malaysia will be exempted by these two separate business sources. First one is intercurrency business, which is the business carried in non-ringgit Malaysia currency. Second one is qualifying ringgit accounts, mean an account that is for investment in a ringgit Malaysia currency. Okay, for the chargeable income, there is no special regulation or rules on the taxation bands. Okay, chargeable income is computed according to the general income tax that is provisioned as follows. Okay, gross income includes interest and discount receivable, commission gain on foreign exchange, dividend from short-term investment, rental of safe deposit plots, sales of Malaysian government securities, MGS, and etc.
Okay, I will proceed with number 7, the interest paid by banks or finance company. Paragraph 33 of Schedule 6 of Banking and Financial Institutions Act 1989 state that non-resident receive interest from bank or finance company that do not have place of business in Malaysia will be exempted from withholding tax. With effect from 2nd September 2006, withholding tax paid by Islamic Bank established under the Islamic Bank Act 1983 and other financial institutions approved by Ministry of Finance will be exempted. The exemption does not apply to interest paid by branches of a foreign bank carrying on business in Malaysia for the purposes of maintaining networking funds of Malaysian branch. The first one is withholding tax on networking funds. Section 37, subsection 1, subsection B of the Banking and Financial Institutions Act 1989 requires foreign bank to maintain 6% of the total assets or 10 million, whichever is lower, as networking funds. In the event of a shortfall, foreign bank would normally remit funds from an overseas branch or head office in the event of a shortfall. The interest paid to overseas branch subject to 15% withholding tax. I will proceed with number 8, the tax planning on foreign banking income. The profit of Malaysian bank subsidiary in foreign countries will be tax exempted in Malaysia at the point of accrual and will be taxed at the prevalent tax rates in that foreign country. The dividends declared by foreign subsidiary and received in Malaysia will be subject to tax, and the timing of taxation is thus different. The withholding tax on dividend income and possibility of recovering the underlying tax from the overseas country must be considered in determining the setting up of overseas branch or overseas subsidiary. Okay, I will proceed with number 9, which is the investment in shares and property held by bank. The tax authorities are inclined to regard all investments held by banks as current assets that constitute stock in trade held in connection with normal banking business. There are no provision in Act and little guidance in Malaysia's tax treatment. Okay, I will proceed with number 11, which is the interest in suspense. The main source of income to a bank is income derived on loans given to customers. The example of loans are business loans, housing loans, car loans, and etc. The interest income would be subject to tax for YA. Loans in arrears for a period of 6 months or more will be credited into interest in suspense account. It is said to be non-performing loan. According to Section 24, subsection 1, the interest in suspense will be assessed as business income even though the income had not been received. According to Section 34, subsection 2 and Section 34, subsection 3A, the bank simultaneously provides specific provision for bad debts to reduce its chargeable income. If bad debts are subsequently recovered, it will be taxed.
I will proceed with the deductibility of the bad debt. Under Section 34, Clause 2 said that for satisfying the need to deduct the bad debt, there are some requirements to follow. First one is there must be a trade debt. Second one is reasonable estimate that the case either fully or partly recovered. The third one is arises in the course of the carrying on the businesses.
Proceed with number 12, which is the overseas branch exemption. The resident bank carrying on banking through overseas branch or related associated company outside Malaysia will be given income tax exemption of 5 YAs. The related associate company refers to company where at least 20% of share capital is owned by bank. In conditions where an application made to Bank Negara during 24 October 2009 to 31st December 2015. Second one is the overseas branch or related company must commence the business of banking with 2 years from the date approval from Bank Negara. The amount exempted would be credited to an exempt income account from which 2 years exempt dividend can be paid. The exemption period shall be determined not later than 3rd year of overseas branch.